Hello, I'm Ingrid Willinge and welcome to Media Week. Head on the program today, we look at global consumption trends with Havas Chief Content Officer Farrell, plus 9 splurges, almost $1 billion for NRL's TV rights, but did they pay too much? Well, first on the show today, it's been a significant week for media results with 2 big ones, Fairfax and News Corp out with numbers. News Corp's acquisitions of US real estate company Move and publisher Harlequin seem to be helping the company. It lifted full-year revenue 1%. On the full year, though, News Corp made a net loss of $149 million, with the media major noting tough currency headwinds and a changing media landscape. Fairfax Media also out with numbers. It posted a net profit of $83.2 million, a 63% decline on the previous year, but investors like the result thanks to Domain, with the company saying digital revenue now fully offsets the decline from print. Well, for more, as always, we're joined by our co-host, editor and publisher of Mediaweek, James Manning, in the studio with us. James, good afternoon. Welcome to the show.
Hi, Ingrid.
So a big week for media results, of course, as we mentioned, with the 2 majors out with results. Let's start with News Corp. What did you make of that one?
It was interesting. Lachlan or Rupert Murdoch weren't on the analyst call this morning. They share chairmanship of the company now. It was left to Robert Thompson and the CFO to talk through the results. Robert Thompson was here in Sydney, of course, because the board of News Corp's been out in Australia on a bit of a tour. Robert Thompson also noted it was the 2nd anniversary of the new News Corp, if you like, and he just talked sort of introduced it in the analyst call. He talked about what the company's been investing for long term, about the move to digital, and he was quite bullish about it. Said it's been very successful, and how they continue to invest for the long term. I guess that's what companies, public companies, have that dual. You've got to walk that fine line, haven't you, of getting a good result for the shareholders in the short term, but also investing for the long term, and they seem to be managing that quite well. Some of the highlights he talked about were the strength of the Wall Street Journal, the Times in London. One of the analysts asked about the sale of the FT recently and what sort of valuation that put on the Wall Street Journal, and he sort of intimated, he said, look, you can only imagine what that would make the Wall Street Journal. He said, look, it's a lot bigger, it's a lot more profitable, and he said that would really make it a very...
They wouldn't look to sell it off, though, would they?
Well, no, but if you use the valuations that the Financial Times attracted for its sale to the Japanese publisher, well, you've got to think what would put the Wall Street Journal out of reach of just about anybody, I would have thought.
Indeed.
There's still a few challenges there, though. Ad revenues on the Australian newspapers were down about 8%, I think it was.
But we know they're still committed to that.
Yeah, absolutely. A couple of weak characters, weak sectors. They pointed out auto, I think, was one of them. And retail was also down a bit. That's what Julian Clark talked to us the other week. He said, look, they're very good for retail. So he's reminding retailers, look, you can still use the print offering.
And those acquisitions of the real estate company, the US real estate company Move, of course, helped them as well.
Yeah, and they talked, look, Robert Thompson talked about they're the international digital real estate leader now, so they're really wanting to build a global portfolio of those real estate digital businesses.
Speaking of real estate digital businesses, Fairfax also out with results, and Domain still very much the sort of crown jewels, isn't it?
Yeah, look, at really that the growth of Domain helped offset some of the other revenue declines, and revenues were pretty steady, I think. You talked about how the digital growth was starting to make up now for the loss in print. They're not quite on parity yet, but look, they're working towards that, they said. It was their best top line result in 8 years, I think Greg Highwood explained. Print ads were down about 11%, so that's a continuing trend there. They invested, he again talked about investing for the long term. He said, look, we could have had a better result this year if we hadn't invested so much, but he said we've put some money in with one eye on the long term. Really built a significant events business. Digital subscriptions was one of the good news there. The dollars were up 36% there. Again, I don't think it quite accounted for the loss in print revenues, I guess, circulation, but they're getting pretty close to parity there.
And we are seeing attempts by both of them, of course, to adapt to this changing media landscape. Let's take a look at how the stock market reacted with Evan Lucas from IG, who joins us now. Evan, good afternoon. Looking at a sort of instant reaction, I should say, on News Corp and Fairfax results today, both very positive.
Very positive indeed. And look, listening to what James said, that's certainly what the market looked at. I think if you look at what the analytical world saw from it is that Fairfax, for instance, if we look at them first, they actually beat just a little bit on each metric. They are clearly showing that they are slowing down in their decline. There's still a lot of concern around their big mastheads being the Age and obviously the Sydney Morning Herald, but they did see digital on the upside. Domain clearly is helping them there. So to see net profit at 83.2, close enough, so 83.8 was the estimate, but revenue really did power ahead of expectations at 1.87 versus 1.82 billion Australian dollars. So that was good to see. Dividend came in line at 2 cents. They are showing that there are some signs at Fairfax that things are slowing down and slightly getting better. The only thing that may be a concern in FY16 is the fact that the cost side of Domain is supposed to grow by another 30%. Clearly their revenue is there, but if we do see a slowdown in the housing market, obviously your listing postings are going to go backwards as well, and that's the only maybe caveat, but it was a very good reaction for the share price, has jumped up over 7%. On the other side, looking at what goes on News Corp, also very good numbers. And the interesting thing that I saw out of this is that I just heard James talking about investing in the long term. One part that obviously is probably the slight negative around News Corp is what's going on in their digital education. They're actually going to sell that out. It's been a fairly much, let's be honest, a horrible acquisition in terms of what's going on there. They will continue to service the arms that they have, but they're no longer going to roll it out. They made a $22 million earnings loss on it, and that goes hand in hand with what they see quarter on quarter and year on year. But there's no doubt the digital subscription and also the info technology print media side is doing very well. Quarter on quarter up, year on year up. It also came the same on their cable networking TV. So that was probably what's good on the quarterly numbers. Yearly, as you already announced, they were down. That was expected. So News Corp looks relatively stable. Again, print media in terms of the longer term outlook is still a little bit clouded, but both were championed by the market because they beat consensus and paid either in line or an unsurprised dividend.
All right, Evan, we'll leave it there. Thank you so much.
Thanks, guys.
Evan Lucas from IG there, and of course an interesting thing to look at as well is Foxtel results, of course not officially listed on its own, but interesting because we've been talking so much about sort of subscriber base and people seemingly more willing to pay for content, and we're seeing this flow through on subscriber base in Foxtel. Yeah,
look, their subscribers numbers are up. They took a pretty bold step. It must be nearly 12 months ago now, the end of last year, was it, when they were earlier this year, they really restructured their pricing, letting a lot more people get in on the base subscription. I think it was like $25 you can get in now, something like that. Then you add on the bits of their subscription you want. That didn't really affect them too adversely. They had some other challenges during the year. Ad revenue was a little bit softer. Some of their costs are up. Some of the sports rights they had were factored into this year. They came out of the bottom line. But they were very bullish about that. Spoke to Richard Frinson this morning, asked him about if they're making any learnings from that pricing. Could we expect some more changes, some more aggressive stances? And he said, no, look, they think it's still very early days on this new structure, and they're not going to fiddle with it too much in the short term.
Wait and see how the competition go as well. Well, let's talk Nine, because a huge deal this week with the NRL rights, of course. Almost $1 billion paid out. Talk us through this.
Yeah.
Whether you think some are saying it's too much.
Yeah, look, 925. Look, you can spin this lots of ways, but if you, in terms of live games per game, they're paying less. So from Nine's point of view, it's maybe not a bad deal. So look, 925, that includes some contra, so that's going to pull it back maybe closer to 800. They probably get some money back if Fox Sports decides they can. Fox Sports have the opportunity to simulcast those 9 games. Nine will get some money back, maybe as much as $100 million. So that'll come off that fee as well. So it starts to look a little bit better for Nine, but you've got to wonder now, gee whiz, if Fox Sports been left napping at all, because Nine would have been concerned about the 10 and Foxtel deal. They thought, look, gee whiz, if we want to get a bid in early. I'm surprised maybe this has happened. Somebody has made a preemptive already on the AFL. Perhaps that's happened and we haven't heard about it. But it's like making a pre-auction bid on a house. You think, well, am I going to pay too much? But it does give you the surety that you will get what you want.
So you think it's worth it for them?
I think so, yeah. Look, it really secures. They've got 4 nights now, or 3 nights and 1 afternoon, which leads into, which rates well. It's guaranteed programming for 5 years. It takes takes them all the way through to 2022. So it really, gives them security about the business.
I want to talk about Commercial Radio Australia. They've released the first ever digital radio ratings. What's taken them so long to actually get these out? Because we've had digital radio for a while now.
We have. Look, it's not a decade. It's over 5 years, I think. But they've been building that sector, if you like. Look, it started at zero, so they've just been building, getting some scale there. So it's finally, they think it's. And GFK, they had a new measurement system, which was only introduced last year, so they needed to bed that down. Once they were happy with those, if you like, those analogue ratings, they next cab off the rank was getting some digital data, and we've got that now. It's good news for some of the big brands like Triple M doing very well. I think Triple M, the classic rock or the Triple M modern rock, is the #1 digital format in 4 of the 5 metro markets. The market that's not leading in is in Melbourne, possibly because the Triple M brand is so strong there on the conventional analogue radio. Coles Radio, which Nova Entertainment runs, a boutique station, is #2, so it does very well. And then ARN's Pure Gold 80s, Pure Gold 90s, that does very well.
How often are these surveys coming out? Do we know?
Not quite sure. It might be 2 a year.
All right.
But they're just cum figures at the moment. There's no shares and stuff like that. And we only know the top 3 stations in each market and the top 10 nationally.
All right. We do have to take a quick break here on Media Week. Coming up next, though, we'll hear from the Chief Content Officer at Havas on the ever-changing global consumption trends. That's next.